G'day folks, welcome back to Pete's Investing. It's June 6, 2024. This is the update for gold, silver, Bitcoin and the US dollar. As you can see there, they've all gone sideways with the exception of the US dollar. It's dropped slightly since our last update. In terms of the heat map, we've got, see there in the center left there, you've got all the monthly trends are trending bullish. It's got a mixed bag on the weekly and likewise mixed on the daily in terms of trends, and we're using the CCI 150 to determine trends. We've also got these other instruments for your reference, which we track on other various videos occasionally. There's a three-step process to trading, and I'll go through the trading strategy in the video. But there's also some links in the description below should you wish to learn more about it. But step one, we need to determine the higher time frame to trade. So, for example, if you're trading on the daily time frame, you need to trade in the direction of the weekly trend, or if you're trading on the intraday, then like the 1 hour or the 2 hour, you should trade on the daily trend. Step two, you take a fresh, when CCI 150 does a fresh breakout from the moving averages, take a position, long or short, and step three, you close out the position when that CCI 150 enters back into the moving averages. So first looking at gold on the trends, you've got the monthly here and you see it's bullish. The CCI is above the moving averages. Although notice we've got a bearish divergence, lower highs on the CCI versus higher highs on the price. That's a bearish divergence. On the weekly, another bearish divergence, but we're on a bearish trajectory. The CCI is below the moving averages, so it's giving us a bearish signal. And we've also got the bearish divergence as well. Lower highs, higher highs. So just be careful about going long. I wouldn't be going long at the moment. And on the daily, likewise, we did have a couple of bearish divergence here. Lower highs there, higher highs there, dropped off. Hit our minimum target range. That's the Fibonacci range between the 23 and the 38% level. And we've got a secondary bearish divergence here playing out. It's dropped off slightly, and it's still it's currently in a neutral positioning on the daily time frame. If we jump to the hourly and daily chart, and I've got the daily here as a reference point. Basically, again, taking only short trades, and notice it's actually broken up into the moving average band, so it's neutral at the moment, so don't take long or short trades at the moment, but you would have taken a short trade from that point on the smaller time frame. So we're looking at the hourly time frame here, so that would have been a going short position there, and that generated 76 points. There was a bit of a sideways movement here, but then entered another short position there. That was -3 because it would have entered around there, and that would have been about break even. That generated about 7 points, and that was also another sideways move as well, which had a -5% gain. So again, overall, the net result of that little trade during that period was 76 minus that, plus that, minus that, is in a positive nonetheless. And if we went back to this period as well, going back to the 15th of May, just going to give you a bit of background here. So the 15th, that was back there. So let me just get the right coordinates. That was the 15th of May, going back here. Taking long positions only. You can see there, from that point, that would have generated 12 points, another 7 points there, another 26 points there, and you would not have taken, that was going short, so you would not have taken that one. And then because the CCI was dropping off, again, you would not have taken that little trade there. So that was an overall profitable trade had you gone long during that period in that little range there when the CCI was above the moving average range. Next, we look at silver. Now, silver's bullish at the moment. The CCI is above the moving average, so it's a nice rise there at the moment. There's no divergence to talk of. On the weekly, that's also bullish, but notice it's also the CCI is pulling back, coming towards the moving average, so just be careful about going long. And on the daily, it's already broken down below the moving averages. That's a bearish signal. And that was after it hit this resistance at 32.52. So, and in a conjunction with this bearish divergence, it bounced to the downside. And now it's currently sitting on this diagonal ascending trend line, drawn across those tops and bottoms. And it respects that diagonal trend line. And we'll see how it goes in the coming hours and days, but that's currently moving towards the moving average band. But predominantly, if you're trading on the daily time frame, I'd be going long only until we see this break below. But at the moment, hold your trades until we see more a better result. So overall, Looking at the hourly and the daily time frame here, if you're trading on the hourly, this can apply to any time frame, of course, in the intraday time frame. But at the moment, we're predominantly going short. So if I was to put on the short positioning, so again, from that period back there, from that peak, you would have taken some long positions there. A couple of false breaks, but -1, 5, 12, -5, and that was a -2. So small returns over that little trading period back there. You would avoid going long at the moment. Sorry, going short at the moment because that's broken to the upside, but also avoid going long because the daily is still in a downtrend. So only trade in the direction of the larger time frame in this case. Okay, so Bitcoin is doing okay. On the monthly, it's bullish. Above its moving averages there, that's bullish. On the weekly, we're neutral, and it's currently reaching these new highs, but it's still neutral at the moment, stuck in this real range in the CCI band. And on the daily, I've drawn this resistance line at 71,950, and it's actually hit that a few times. And again in the last day, so just be careful of that one. But currently it's bullish. The CCI is slightly above the moving average range on the daily there. If I jump to the hourly chart, again going long only, you would have taken a long trade. Let's put on the long indicators there. So again, going back to this point back here, that was about where that started on the daily. So on the hourly time frame, you would have taken a long position there. You closed it out there, gained 563. Would have entered another long position there, and you probably would have closed it out already. But at the moment, according to this little strategy that I've included here, it's still showing as a, oh, there we go, sorry, open there, and it closed it out when it broke below in the moving averages there. So it generated 1,058 points in that little trade there. So currently wait for it to break to the upside before taking the long trades, and preferably break above this resistance at 71,950. Looking at the US dollar, now on the monthly, we're in a bullish scenario, but you notice that's a very thin moving average range, and the CCI is coming back and just above that moving average range, giving us a very slight bullish signal. And we did have we've still got a bearish divergence here versus higher highs in the price. It's fallen off. You can see there it's actually fallen off and hit the 23-38% level. So that may have already played out, the divergence. On the weekly, we've got a bearish momentum with the CCI broken below the moving average. So again, just be careful on this one about long positions, and on the daily as well in the short positioning. It's been short for a while, and that's as a response to this almost double top on the CCI. That was a bearish divergence versus double top on the price, and that fell off quite significantly and resting near the 61% retracement level. So it may possibly bounce off that, or actually if it goes much further, we may see further declines in the coming days. And if we go to the hour chart, you can see there we only take short trades because of the dailies in a short positioning. So going back to approximately the 31st of May, that was around this period, you would have taken a short position there. That generated 2 points, almost 3. That would have been a small loss, and this one was another small loss, so that was going sideways. And you avoid taking any further short trades on this one. So again, not a very profitable short positioning on this one if you're trading on the hourly based on the daily trend. Let me just try going back just to test. See, sideways markets always ruin profitability for traders. Going back to, let's say, the 1st of May, that was back to this period. You can see there it dropped off. Let me just zoom in a bit. Generated 68 points in that little drop there. Had another little, almost a sideways move there, but notice the CCI and the moving average band was rising, so you possibly would have avoided taking that trade. No trades there up until this point. That was a small loss. Another loss, another loss. That was a gain of 61 points. So overall, when it does go sideways, you have these little losses, and you can sometimes use your decision making and decide whether it's going sideways or it's actually breaking to the downside. You can see there when both the moving averages and the CCI moving averages are declining, that's where you would have been able to take some short trades, and that generated 61 points. So again, going only in the direction of the larger time frame. So if you got value out of that video, hit the like and subscribe button, hit that notification bell. Remember, the links to the trading strategy are also included in the description below. Thanks for watching, and see you in a future video.